Okay, recap for Wednesday the 15th of October 2025. Alright, if anybody's watching, I know the chart is ugly AF right now, but I'll get to cleaning it once we go through the levels and what price has done. Right, so today initially I recorded my market recap for yesterday's price action pretty late. I think I woke up at London today, and I think price was around here when I started the recap, and I was just basically explaining how easy yesterday's price action was, and my trade, me catching the low and just being content with these highs, even though I know it's the final target, right? Either today or tomorrow would be taking this, but of course I'd expect it not to take it because you can't. I don't expect this Tuesday to take previous daily low and previous daily high at the same time, right? But I understand that this low is not gonna get touched until we get this high, and then maybe we could look at it. Okay, so I'm bullish until this high, and then I can see what's going on. I also explained how I don't like, let me get rid of the annotations, how we build in the stairs, right, to go up. So I said initially I want London to go down, or it'd be New York to go down, right? And I thought it'd be London making equal highs with this and then going down, because it didn't make sense on the 4-hour chart. The low, right? This low. So if we look at what price has done once it went up and went down here, you'll see that it doesn't actually offer discount. It barely misses it, right? And on ES it's the same thing. It's low-key even worse. So ES has kind of a different market structure, but this retracement is not enough, right, for me to trust this to be the low of the day. So in my head, the low of the day has not been made, and I said in the video I'd like price to go right down here to this exact price level. I literally said it in the last video. This low of the 4-hour fair value gap, I want it to be fully filled, because to me that is the only place that makes sense for price to go up, right? So in my head, I was waiting for New York to do that initially, if we're not going to take that high, right? So I said that in the last video, and I said because it's the only unfilled gap as well, and because yesterday we have not touched the breaker, low, high, low, 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 and to me that was weird that we didn't touch the breaker, right? So once you go to the 4-hour, the only PDA rate there is this 4-hour gap, and closing it would make sense. And then I said on the 30-minute, if you just look at it, there's going to be a gap, and there it is, and then you see price goes down to that low. So I know the low of the day is going to be here. I just thought we're going to have it much earlier and then expand, right? So I guess I was wrong on that part. And also it didn't make sense to me that we're going to have to fill a whole 4-hour gap to go higher, right? So I guess that's why we went up and went down, which makes way more sense, right? I didn't think about it that way. Anyway, enough of whatever. We know this ain't going to be the low of the day, okay? So let's work one by one of what happened, right? Asia makes a low, and this low is this reclaimed 4-hour gap, right? So once price went up and went down, this 4-hour fair value gap that we used initially, we used the CE of it. Okay, cool. I do not expect low of the day to be made in Asia. It's either London or New York. So that was, to me, already sus. Okay, so we're gonna get rid of this now. So we know this is Asia low. We have PM low as well, and its relative equal lows and discount is below it. So until this whole run, I'm just expecting price to not take this high and go and offer that discount, right? And it doesn't. It actually goes up. So when it goes up, then I'm expecting one thing: New York to open up, shoot up, right? Shoots up, there's 3 scenarios, right, when it's gonna go down, to me, right? Like the ones I'd like to trade. Price makes a high between 10:08 till 10:11, right? Basically ending of the first micro. Okay, as you can see, it makes this high, but it doesn't touch my PDA, that one, right? Secondly, I want price to do the accumulation and then make the second high between 1028 and 1032, right? Like around that area. And then the last, it'll be London close macro. However, that have to be in London that was this low. London would have to be in this low that I wouldn't expect to be low today. So I'm expecting, if price doesn't make anything between like 1040 really, like the high, then or 1010 around it, then right, I wouldn't expect it to be to dump right for that day, and I'll just leave the chart. However, as you can see, it made the high. I'm guessing it should be roughly there, but I wasn't awake. And then yeah, 1031. Right, this price was spamming this 2 years ago, like this exact thing, like these exact times. I don't know why. I'm just giving you the times that I noticed them, right? Because I log every single day since a while, right? So I'm noticing the times where it makes the high. And you'll notice there's two different market structures. You'll see this is 2022 model. However, this is the breaker model, right? And you'll see the high is at 1010, right? And you see for the 2022, because it takes the accumulation, it's around that 1030 area, right? Launch has the same, something similar as well. Not this launch. I don't think this launch has one, right? But it comes around 1230 as well, but just something smaller. Anyway, enough yapping about all the extra stuff. Let's get to the actual trades. Trade logic for the day, whatever. Now we know that price is bearish, right? So what I expected price to go is go up and then dump, right? I'm awake here. I see price go down, and then it's just meandering. I went back to sleep, right? I'm deciding to wake up in an hour. I want to see where it does at 10:50 and then offer me, because I know the TP is so far away. I can get in the trade anyway. It does not matter, right? So I just went back to sleep, right? I woke up around here, and this is basically a classic 2022 model, right? From this high to this low, right? Once we actually start the movement, I want discount. Where's discount? Right, there's a fair value gap here. Do I see any fair value gap next to it? No, that one's too far, and that would go above this basically. However, we have the first presented fair value gap that was used today, right? You'll notice it's at 930, right? And there's only a few times where you could use the 930 as a first presented fair value gap, and I can't remember what lecture ICT teaches this, but it's the one that takes liquidity. So like, for example, if on like regular trading hours, right? So you see all this buy side here at 930, this one takes the liquidity, and that'll be the only instance you'd use this as the first presented fair value gap. Don't know why, but that's what ICT says. All right, anyway, you'll notice, like, for example, here at like 938, there's really no use of it. It's just going up and below it. But however, this one CE goes down, but the bottom of it goes down, and then when it goes up top of it, inversion stays up, right? So I don't have anything to use here. However, I have the first presented fair value gap at discount. Boom, that's my entry. And I take the short all the way to the sell side liquidity that I said it's gonna go to earlier in yesterday's recap, or this morning recap, whatever, right? When I woke up in London, this is the low that I said I'd expect this to be the low of the day. And then after that, I know it's gonna go up. Like, I guaranteed you it'll go up, because this is what I thought London's gonna do, right? I thought London's gonna give us, where's one, right? Relative equal highs, go all the way down at like London, get the low of the day, and then New York continuation up here, and then we come back and close around here, right? It's the same thing, but the market can do whatever it wants to do. As long as you understand what the market wants to do, then you'll be fine. All right, now here's the important thing, right? Let me just get to like where price could go before I get to that level. So we know that the target would be at least previous daily high, and above that, what do we have? We need to go get daily levels or 4-hour levels, right? On the daily, this fair value gap, right? We have the CE and we have the upper quadrant. Okay, so that is above the liquidity. So I expect a reaction here. No reaction, that's fine. Upper quadrant, perfect. Right there. See, this one misses it. You wait, goes up. That's the reaction. And then you want to go and go against the order flow. Once order flow breaks, right? What's like the most prominent fair value gap that's pushing price? This one. Okay, like if you're looking at it like that pushed price, this one, right here. So once we go and close below it, right there, that's then and only then is your short you can add to, right? For example, like for this type of trade, if I'm awake, I would have short here, right? And then like I would short when price hits here, leaving the stop loss slightly higher, and just if it's gonna do this, it's gonna do this. However, it can't go like this, and then this is where I'd add, right? So I wouldn't expect price to come back up. AB, this section for you, right? This one meant for what should you expect in price, and when to like move the stop loss and whatnot, right? As you can see, all these boxes are like just fair value gaps in their respective time frames, right? And you need to understand order flow. And I think the best time frame to understand order flow for the current price action, right, is the 5-minute time frame. Let me explain why. Like for example, if this PD array here, like if price, for example, closed above this on the 5-minute, I would not take that trade. It's simple as that, right? Like the 5-minute has to respect these PD arrays, okay? The closer, where it closes, is important. The 1-minute can kind of close above it here and there, but 5-minute has to close, right? And once you understand this, you'll know when to move the stop loss, right? So the best thing for you when you enter a trade and you want to move a stop loss, this is what I've been asking for, seriously, like, because the amount of times that I'd enter here, right, and then I would put my stop loss at break even and it goes against me was insane. And that's exactly how I blow accounts. Once this happens, this goes up and I'm like, oh shit, and maybe it's trying to go, you know what I'm saying? That's how I used to blow my accounts, right? But now, since like 3 weeks ago or 2 weeks ago, I'm not sure, that I implemented this rule is wait for the first 5-minute inversion. Alright? And then that means order flow has fully shifted. The accumulation, the chop is completed, right? Every time, wait for the first 5-minute order flow and then catch this swing. Let me explain. For example, here, let's say you entered this short. I think you did enter the short right up here. This, unless this is inversed on a 5-minute time frame, right? Fully closed below this low, has to be a full closure. Then and only then could you move your stop loss to break even or to the swing of it, to the swing that closed the gap, right? For example, here is the swing that closed the gap, right? This is if you're going to move aggressive, so stop loss would go above here, right? Let me give you a bunch of examples, right? Because I think this wouldn't make any sense. Just before I give you the examples, let me just go back to the trade, right? So order flow on the 5-minute time frame is important because then it'll actually tell you what price is doing. Here, for example, I want price to go ahead and go to discount and go to the fair value gap in discount. On the 5-minute time frame, I can see this fair value gap, and I know on the 15-minute there's another one, okay? However, where did I say discount was? Right there. So does that mean price can go up? Yes, it can go above it, but it can't close above it, okay? it can't close above it for me to be like, yes, we're fully bearish. And if it does close above it, that's a lot of warning signs. Like, for example, if I caught the short from up there, and I know it's a 2022 model, I know I'd have to take something off here and wait for discount and re-enter here if I want. But this was my first entry. Price does not close above this fair value gap, right? And this is on all markets. Like, you have to follow it. Like, it can't close above like the order flow. It can wick, sure. I want it to go here because I want it to offer discount, but I want it to close below. It's the same thing with the ES. I'm tracking ES at the same time, that fair value gap, right? I want it to hit the breaker. Cool. And there's a mini fair value gap here, but I mainly think I want it to hit the breaker, okay? However, it cannot close above the 5-minute fair value gap to me. I know there's one here, but this one is so low that it doesn't really count. But like whatever one that should really get priced down, right? This, because this is, again, if I'm looking at the other side, there is the inverse fair value gap that will invest, right? So I would not want price to close above midpoint. So you can wick, but it can't close above midpoint, right? So once you understand that that 5-minute time frame order flow is important in terms of closures, right? Where price closes in terms of the PD arrays, then you'll know when it's guaranteed to move your stop loss, right? So I know there's a, but as long as there's shorts, there's everything in this day. Like I could short this, long this, short this. Like there's so many setups, right? The main setup for the day was this, right? The easy long. I would not, right? Once I enter and the stop loss is at this low, I would not ever touch that stop loss until we close above this first 5-minute fair value gap. And then and only then I'm gonna have to put it at this swing. Now you see the swing here, it's still this low, right? So for this reason, you're gonna have to like go filter it down into like the 1 minute and be like, okay, what's the most probable that it'll never go to, right? And then you can push price up to like this low. I'd say I would not want price to go down here because it wouldn't make any sense if we're still long, right? If you're gonna filter down, and then you can adjust it. Like making it this swing is like, for example, this swing, of course, I would never expect price to go up here. However, this is just like the rule to be extra safe. But like, of course, you can filter it down. But as long as price doesn't close above this on the 5-minute time frame, it could keep coming down, right? Not take the low, but it can keep coming down and hit the break even or hit, or you enter the wrong trade, right? As long as your trade is right, and as long as you know what low it is, and because I know you use SMT, right, a lot, and you like, this is your main confluence to know your low or high, then this is your missing element to move in your stop losses or not, right? To break even or not. You'll notice like you can look at all your trades. Go ahead and look at all your trades. Like I can give you any examples from highs and lows, right? Like for example, this dump, I did the same thing, right? See, this dump I would have got stopped out before because look how high it went, because I would have kept adding below. Here's the first 5-minute, right? Now I know the order flow has changed, okay? And then now I can trust that when I entered this high in the 30-second, I wouldn't want price to go up there because on the 1 minute I can see this whole fair value gap and this will do the breaker. I can allow it to go up here to fill this gap, blah blah blah. But as long as we have done that, notice what price does. Once we do what we need to do, which is fill this gap, hit the breaker, we are below this 5-minute, we're not closing above it even in the 1 minute time frame, and then do the dump, right? You'll notice whatever, like low, high, whatever, right? This is the main thing that you need to look at. What's the 5-minute doing in terms of order flow and in terms of closing PD arrays? What is it doing? Is it closing above it, right? So like, let's say for example, it closed above 1. Let's say I'm short and it closed above 1 PD array. Then you're gonna have to gauge whether to like cut it off or not. Other than that, I think that's the only element that you actually miss into your trades. You're getting basically the same entries as mine when I'm awake, right? I'm never awake these days. Like I noticed that the more that I don't care, the more money that I'm making with this, right? And like the more consistent I am, because I know I can find a trade once I made it easy for me. Because and this is like my, what do you say? It's it's like if you make it easy for yourself, right? Then you wouldn't really care because you know you can always catch whatever that move, and it'll become so easy, right? So for example, to me, I know I can catch 750 any day, right? Very easily. That's my target in my head. I want just 750, right? For the day. I know for yourself, you're probably doing the same. You can see 750 every trade you have ever entered, regardless if you want to lose in. If it, like, I doubt you have that many trades that you enter and boom, it goes straight to stop losses. No, but like you've seen it go into your favor for like at least 750 or 0.5, right? And I worked it out. If I just keep taking these 750s, won't I just be profitable? And surely it works, right? And then I calculate. So if I just do take 750, right? I know where it's likely gonna go, and then I can allow one day where I can just unlock this 750 to be like 1.5, 2k, whatever, right? It's full TP. Then wouldn't it make sense to just have only 2 days in the week that I'm allowing myself to go just 750, and after that it is what it is, right? So if I'm making 1.5k per week, which means 2 trading days per week. That's so easy. And then times that by 5 accounts, right? We're talking 6k per week for the 5 accounts. I mean 7.5. And then that times that by like 4 weeks. In the month, that's 30k. 15k you can take clean out, right? Once I reach that, which is inshallah like next month or the month after it, whatever, once I stack all these 5 accounts, and then I just keep it at this low 750 and then just get that, keep getting 2 consistent big bets, then and only then I can increase my leverage or whatever, right? I'm working to get consistency, and since I've been working to get consistency, trading's been so much better and so much easier. Like for the past weeks, I'm like, especially 2 weeks, I'm just sleeping, right? I'm sleeping, I'm looking at the market, I'm like, don't like it. I sleep, I wake up, oh, I can see something, take the setup. There's literally I always been every day for the last 2 weeks, right? I'm just sleeping, I don't care because I know I can catch a 750 move the whole day, right? I could catch this long, I could catch this short, I could catch this short, I could catch this long. Like whenever like I look at the market, I know kind of roughly I will have a setup here or there. Okay. Or if I don't, I just don't, I don't trade it. Okay. So whatever that number is that you know you can get every single day, just try aim to do that consistently for 1 month straight, regardless of how small it is, right? Because then you can multiply it by the amount of accounts that you have, and then whatever that number, it's just like clockwork. It's so easy to get. And what does that allow you? Because 750, that means I can lose much more in the trade. Okay, for example, this trade, look at it. Look at the TP. This one I allowed myself. I entered with 2 MNQs. Okay, two, right? My stop loss could literally be up here, and I do not care, right? I know it's not going to be up there, but it gives you that if you're wrong, your stop loss can be that much higher type of thing, right? And I think I literally I didn't even have a stop loss, right? I could make it wick whatever. I could like make it wick to this tiny little gap, right? Or whatever. I don't care. I don't have to be too precise because I know where price is gonna go. and look at the amount of risk. It's nothing, right? And if this wasn't a Wednesday, I would literally have it probably even one, right? Aim for 750. Okay, that I see that as too much, so I'm gonna have to add 2 contracts, right? And I would literally get out at where? Near Asia low, not even Asia low. Okay. It's consistent. I'm literally just seeing green days, green days, green days, green days, or break even days, right? Because how simple it is to get that low of movement, and there's no pressure, right, on losing this amount. Nobody like is whatever, right? Anyway, that's the market recap. Do look into the 5-minute PD arrays, like I'm saying, 5-minute closures of PD arrays, right? I'm telling you, every low, every high, if you have PD arrays that are marked. But the most important is once you enter a trade, watch the 5-minute gaps. These are just the most important thing. Watch the 5-minute gaps, and are we closing above them? We close above it, perfect. Stop loss below this low. We close above it, then you can don't like push it too much, but just know that there should be no reason for price to go and hit your entry, as long as your entry is very low, right? As long as your entry is like a really good entry, price should not go to your thingy. So you should know that it's safe to be break even. You can trust your model, and if you ever see that price is going down after doing this, like right, like disrespecting these bearish PD arrays, and it's going down, then you know you're wrong. You don't need to let your trade, you don't need to trust your model. Just be like, you're wrong, right? Because I know here on ES, my model is literally here, but I know on the high, I know it'll offer me 750, right? Like, this is one of my balls right here, this entry. Is it gonna offer me 750? Yes, very easily it's gonna offer me 750, right? But I know on the higher time frame, the actual targets is these lows, right? So you can use it whatever way, right? So once like this gap has been closed above, then I wouldn't expect price to go below before giving me that initial TP, right? So yeah, that's all you need to kind of know, I guess. I think your model's perfect, your liquidity targeting, blah blah blah, etc. It's all good. Entries are perfect. That's it. It's this last part about moving stop loss, right? Like, let's say I enter here, and I'm pretty sure this would be the 1010 end of the macro. Yeah, high at 1010, right? Again, I enter, or you enter the high, for example, 5-minute. You would not want to do anything about the stop loss, because in this area, just think about that 5-minute. It's gonna give that retracement, right? Gonna give that retracement. It's gonna give it that consolidation, blah blah. Once we close below it, right? Well, preferably midpoint, but like, to be fully safe, is fully below it, right there. Then you would not expect price to go to this swing, right? So you could put your stop loss above that high, and like right here, and sleep like a baby, right? But if you got your entry somewhere here, then you just put it break even, because you wouldn't even want it or expect it to go up there. But this is the extra safety, right? Like, kind of a rule for it. It should not go up there until something happens, and that something happens is us goes going to this low, hitting this PD rate, and then it could have went back up, but because the narrative, it's not gonna just stick to this low, it's actually gonna retrace and go lower. Anyway, that's enough yapping. Got that half an hour. But for me, for my private journal, make sure, again, once price is cluttered in all of these PD arrays, just focus on the ones that are on the 4-hour and the daily, right? And look for price swings if they make sense or not, right? If a price swing doesn't look like it makes sense, expect shorts, right? Especially once we stack four liquidities, right? That's one liquidity, that's two liquidity, three liquidity, and here there was a fourth, but we're taking it to go up higher, which I didn't expect. However, it can do that, and which is the lowest low at 7 right here, and then these nice relative equal lows that was eyeing out, right? As you can see, we go down, and to make sure it's a sweep, once we go, we close above it, right? We take it with the wicks and we close above it, showing that we're gonna go higher. Anyway, that's the market recap. Peace out.